Hello, everyone. Welcome to another edition of On the Record with your host, Tone Vase. This is going to be one really good episode. It's someone that I have wanted to talk to for a really long time, and a lot of people respect his work. Our paths have never actually crossed. We've never spoken before other than the 5 minutes prior to me hitting the live button. So we're all about to see and learn some very interesting things, including myself. I got a lot of questions just off the top of my head. So without further ado, please welcome Willy to the show. Willy, how you doing, man?
Hey, Tone.
Yeah, perfect. You're unmuted.
Yeah. Great to finally chat, and welcome to Lisbon. I'm in Lisbon.
I haven't been to Lisbon yet. I was gonna go there for that Bitcoin event, but I don't know. I just I just didn't plan it early enough, and then price of tickets was like $1,500, and I'm like, you know what? That's kind of.
No, it was way cheap. It was way cheap. I came after consensus. I was like, this is really cheap. I think it was like $200-300 or something, but I was coming anyway, and it just prompted me to come early, and it's kind of like the inside baseball of conferences. It's like some really heavy hitters turn up, and yeah.
Well, you were at that event, right? You were at the recent Lisbon event.
Yeah. So you got the people that are really working on the shit. A lot of the core devs. Got to meet Adam back while I was there, and some really nice people. It was actually my first. That's one of my first Bitcoin conferences. I've gone to Consensus. I only went to Invest because I was invited to speak. Went to Consensus just recently, and I really wanted to do a one that was sort of deep inside baseball with the devs. So that was good. I really enjoyed it. Building on Bitcoin.
Yeah, very cool. Very cool. Yeah, there's gonna be the next developer focused conference. I'm speaking at that one actually. Yeah, that's gonna be in Riga, Latvia. You're not still gonna be in Europe in September, are you?
No, I think I'm gonna be heading back to Southeast Asia next month. Yeah.
All right, gotcha. I'm starting my European trip in France. I'm gonna be in Paris on like September 3rd. So, and then from Paris I'm off to Spain. So if you are in those parts, we definitely want to connect. If not, I'll be in Thailand in October if you want to come through. Otherwise, I may have to go meet up with you probably next year when I'm back in Southeast Asia.
Yeah. Oh, it's hop and skip. Hey, I'd love to meet you out in Thailand. Yeah, be fun.
Yeah, that would be great. All right, let's jump right into it. So I'm really curious. How long have you been in the Bitcoin space? And there's a gap in time, right? There's 3 events for guys like us, right? There's 3 Bitcoin milestones. 1 is when you first heard about Bitcoin. 2 is when you bought your first Bitcoin or your first Satoshi. If you're in early enough, probably could have bought a whole Bitcoin. And 3, when did you decide to become a public figure for basically like not an anonymous troll, or basically, hey, I have something to contribute and I want people to hear it and know it came from me, the person. So what are those 3 dates for you? And then, you know what, let me say mine first. I heard about Bitcoin in 2011 from Max Kaiser in relation to WikiLeaks donations. I Googled Bitcoin for the first time in 2012. All I saw was mining. And I'm like, I don't have time for this nonsense. And in 2013, on the Cyprus events, I went out and bought my first Bitcoin. And then in 2014, around April or May, I spoke at my very first event, created my Twitter, created my website, and started, being public, started writing a Cointelegraph June or July of 2014. And it all took off from there. So what was your path?
Well, it was 2013. I was in the middle of running a startup, and around December when Bitcoin broke, I think it was $1 billion, or it was a figure. I think it was $1 billion.
Well, what was the price of Bitcoin? Because no one is going to remember.
Okay, it was like oh no, it wasn't $1 billion. There was a prior event of $1 billion. Actually, it broke $1,000, right? In December,
Also,
it
that
broke
was at the very
$1,000.
end, at the very end of 2013.
Yes, in the December when it broke $1,000, and someone in the startup, one of the devs said, "Oh, Bitcoin broke $1,000," and I said, "What the hell is that?" And he told me what it was, and I was like, "Oh, okay." Well, I used to invest in gold over the financial crisis, 2007, 2008, and I was like, "Well, if it's digital gold," I kind of went, "Oh, okay. Well, gold's 8 billion, 868 trillion." I kind of worked out in my head that if it would get to gold's cap, then it would be about 400 grand per coin, and it was selling for at that point 600 because it just peaked, double topped, and did its dead cat sort of, well, it hit the bottom before it dead catted. And so I bought the bottom of that around $600-ish, and I bought one Bitcoin. I heard it and bought it, right? And then thought nothing of it because I was busy, in the venture. And like later in that year, around the same time, I think around April, I think it was more May, I went to Bali, and they have a bustling, thriving community there run by a guy called Gary Dykstra. And yeah, I went to a meetup. It was run like a podcast show, and I just threw all my questions. I met a great guy, a good friend of mine called Peter, who was touring the world in crypto, going to all the meetups, and he was telling me about what it was. And I really went down the rabbit hole then, and that was when I started to accumulate properly Bitcoin. And yeah, 2014, I kind of parked it when I went back home, held it, and things.
And where is home for you?
New Zealand at the time. I was still traveling a lot. Well, 2014 was the time where I started traveling again. I kind of live internationally. I'm constantly traveling.
So you were already like a nomad when you discovered Bitcoin.
Kind of a break from I started nomading close on 20 years ago, and around the .com years when we could start doing that with dial-up and.
Wow. So what did you do for work like prior to Bitcoin? Actually, what do you do for work now? I don't think you sell anything. You're just doing analysis because you really enjoy it. But what do you actually do for work?
I actually trained as a mechanical design engineer. I used to develop medical equipment. And then I moved into, when I started the Nomad stuff, the mid to tail.com was happening, and I started doing websites, designing websites, UX design, and then ended up through that creating, early startups. In a startup in the early mobile smartphone space back in the Palm Pilot era. And yeah, I don't know if anyone's heard of a Palm Pilot app called Snappermail. We kind of dominated the email space on those Palm Pilot smartphones. That was us. And then did a run of startups, and I've taken time off between then, and I'd say I got into startups in a time between I got into Bitcoin between times of startups, and during, and but when it was about to answer the original question, 2016 was when I started to research on my own. When I had some time, I was just holed up in Canary Islands, surfing by day and just running analysis on the data of Bitcoin and altcoins, and like, yeah, so I had this engineering background. I really like charts and numbers, and I'm very comfortable with new technology. So yeah, I just originally just started wanting to go, well, if I want to invest my own Bitcoin, then where do I put my crypto?
Gotcha. And we're about to jump right into it, but I do have to say, so I am keeping an eye on my live chat, mostly to make sure they're not complaining about audio and video stuff. And the moment we went live, a live viewer named Zorn asked the following question: who is Willy Woo and why should I care? And he got an immediate answer from another live viewer that says, Zorn, he is the best analyst in the game. To which Zorn then replied, so why am I listening to Tone?
Excuse me. I am the best brain farter in the space, as in I'm just making shit up. Like, listen to Tone because he's actually had real industry experience on Wall Street. I'm just the guy from the outside taking a new perspective because I don't know any of the stuff, you know. I come from tech, you know, and I like numbers and I'm just analyzing the way I see that, you know. So
all right, well,
this is why you've got Woo Bull, right? Woo Bull. And bull stands for either I'm bullshitting or I'm bullish on crypto. So you can decide, you know.
All right. Well, since I do have your website up, I ran across your work actually. I mean, I've seen you on Twitter every now and then, but sometime, I don't know, I think around a year ago, I was trying to put together a project. I already forgot what it was. I think I was trying to speak at an event that was really for Bitcoin core developers. And I wanted to do a presentation trying to explain to core developers how the price of Bitcoin matters. I know a lot of core developers think that the price of Bitcoin doesn't matter, but it does. It influences a lot of things. And I guess that's more of my background, being involved in a lot of development in the financial world where the price of the assets actually matter. And as I was doing my research to try and find more data on what happens when certain events in Bitcoin's developer life cycle happen, how it influences the price of Bitcoin. And I think that led me to your work and some of your research, and it's really, really good. From there, I guess this was your last article on Nvt ratio. Nvt is something I believe you developed in the space. So maybe you can tell us about that along with some of your other, original work in Bitcoin analytics, which many, many people really respect.
Yeah, NVT, let's see, Well, basically NVT is the ratio of the amount of money flowing through that blockchain, Bitcoin's blockchain, or any blockchain, as a ratio to its network value, its market cap. I was kind of like, people talk a lot about price earnings ratio in stocks. And I was like, well, what would be the equivalent in crypto where you don't have earnings, it's not a company. You do have a market cap, a valuation. And I kind of thought maybe the amount of money going through it would be the best proxy. And I did the ratio and lo and behold, the numbers actually looked somewhat plausible. And then I started thinking about that. And if you were to think of PayPal or VisaNet as a payment network, and then you go, well, price earnings, right? How much money they make as a ratio to the share price. Well, if you didn't know how much money they were going to make, but you knew how much in transaction volume they were making, PayPal, VisaNet, you could probably ascertain a very, very close ratio using a proxy of the money going through it. And we've got that with Bitcoin, right? We know how much money is going through that network. Well, it's an estimate, and that's inside, if you go deep into the tech with inputs and outputs, you've got to make an estimate sooner or later. But you do get a very good estimation of the money going through the blockchain, and you can use that, right? So you do that ratio, and it sort of came out, right? And I explain it in that way that, like, if it was a payment network or a payment company, that's how you would value it, and it tracks. But I don't take that necessarily as why it works. Like, if you were to do a plot of a market cap versus the money flowing through the blockchain, and you just drop that chart together. And in one of the articles there, it was published in Forbes, I draw that chart and they map almost one-to-one, like high 90% correlation, that the money going through the blockchain and the market cap are very correlated. So when you do a ratio of the two, it should be a flat line, right? A one, you know, or a same ratio, but it doesn't, right? It's sometimes the market cap goes higher than the money going through the chain, and sometimes it dips. And it just turns out that when it's high, it's like price earnings. It's being valued really high versus the money going through the chain. And when it dips, it's undervalued. And in the early stages of Bitcoin, it was very high. And that's like in a high growth company, price earnings is very high, and then it comes back down. And then there's actually the definitive article on Nvt earlier on that blog, which shows how it came to being. You know, my latest thoughts on it is that that whole idea of thinking of it as a payment network and valuing it like that might be a total crock. The numbers behind it, 9 years of very tight correlation. That's solid. And, you know, I presume that that correlation will continue, but it has been ridiculously tight over 9 years. Whether or not we throw this idea around it, like model it like a payment network, and I've had a lot of conversation whether or not that is true or not. It's leading us to think particular ways, which I don't think may be valid. But one of the things I've been thinking about it is that if you look at it in a different view, that maybe Nvt is picking up the difference between what's happening on exchange, like trader games, and what's happening on the blockchain, which is long-term speculative holds. That picks up over-the-counter markets. Like when you buy Bitcoin over the counter, you're going to have the private keys, so you're going to get that money sent to you, and that is picked up on the blockchain. But a lot of the short-term trading stuff that's happening on the exchange, that's not being picked up, right? And actually, a lot of that stuff on the exchange is just trader games. It's a whole bunch of bulls and bears playing literally gridiron. They're going for yards. I'm going to push that with my amount of muscle past that stop loss of, you know, whatever, and gain, you know, trigger stops and push yards strategically. So there's a strategic game playing on, being played on the exchanges for yards, right? And a lot of that's just crap, right? It's speculated technical games that, you know, you could see in altcoin markets that the thing runs up 20x, right? And that's because someone's running a pump, right? And it's just trader games, and it's got nothing to do with fundamental long-term investments. And so I kind of see these two things that might be happening. One is the stuff we're seeing on the exchange is a bunch of trader games mapped on top of a long-term adoption curve of Bitcoin. And what is going through the blockchain is more reflective of what's happening on the long-term stuff. Like, I'm going to trade Bitcoin, I'm going to trade, and then I'm going to settle, and I bring it out of the exchange back onto the blockchain. Now that you're picking up as a real settled trade, OTC or from the exchange, all that trader game stuff is being ignored by the blockchain. So if you ran the ratio of market cap, which is taking into account the trader games on exchange, which we get our price of Bitcoin off, and then you do a ratio with the blockchain throughput, which is indicative of the longer term hold positions, kind of like the crypto Warren Buffett that's going, I see long-term value in this, I value it at this, I'm going to hold it. We're going to weight it more towards what's going through the blockchain. So wherever the market goes through a spaz and goes too high than what the blockchain's picking up, you can expect it to come back down because the long-term hold, the settled trades are more authoritative, and vice versa. When the market freaks and drops below what the blockchain is showing, then it's got to correct back because the Warren Buffetts of crypto have the authority here because they're holding longer term. And I think maybe that's what's happening, because if you were to run and think about Nvt, NVT, if you looked at the numbers behind it, market cap, money going through the blockchain, actually it distills down to what we call the inverse of monetary velocity. It's like how much money, how much the money supply is being transacted over a certain amount of time. The higher that it is, then the higher the velocity. Well, NVT is actually an inverse of the monetary velocity. There's this thing called, whatever, the quantitative theory of money and the quantity theory of money. And a lot of the long-term, a lot of the analysts in this space use that equation. I have as well. You can use that equation to value like altcoins or crypto, and it's a very simple equation. Do you want to? I don't know if I should go into this.
No, it's fine. I think our audience is getting the hang of it. There's a couple of takeaways. One, you were able to predict the top very well with your chart in your article. You don't have the vertical lines here, but basically, anytime the NVT goes above 100 million, you see that as problematic and probably in need of a correction. And NVT caught that real well back in December. And I wanted to click on it now because your article was written in early February. Yeah. I clicked on the link and I had no idea. NVT is back over 100 million. So from a technical perspective, I have to assume you are expecting a correction similar to the correction in July of 2014.
Yeah. Okay. So do you want to just jump up to the charts? There's Wooble charts, and it's got the live charts of NVT.
I mean, I'm on the chart. Can you see my screen share?
Oh, sorry, you're on the live. All right. So scroll down a bit and open in a new tab.
Oh, one of these charts.
Okay. So you're looking at NVT Signal, which was developed by Dmitry. Go to the classic, which is just scroll down a bit.
I think you froze there for a second.
Are you still there? Can you hear me? Yellow.
Oh no.
Are you there? Jump in if you hear me.
Well, wait, I lost you for a second. I'm not sure if that
I can hear you fine. You're going smooth. It's with
it might have been on my end. I think it was my internet connection.
All right. So if you scroll down, Bitcoin investment charts if you scroll down, and then the very top Nvt ratio, that is the classic one. So go to that one.
We are streaming these charts live right now on YouTube.
Okay, so this data comes from blockchain.info. They do an estimate. If you think of Bitcoin, when you send money, an input comes in, and then it sends to the person. That's an output, and then one of those outputs is usually a change transaction going back to yourself, but you don't know which. So blockchain.info, I found, do a very good estimate of which is the best estimate of what's coming back to you. Therefore, you get a good estimate of what's being transmitted through the chain. And so the original NVT is just the ratio, the market cap divided by what's going through the chain, and then I average it over 30 days, for 28 days. And you get this kind of fat brown thing, right, line. Mm-hmm. And in the light lines, that's showing the real day-to-day movement.
Right.
So it's very volatile, but I've smoothed it, right? And you can see in the early stages in 2011, it was off the charts, which is very synonymous with a high-growth venture. Like the network was growing amazeballs in the early days, crazy growth. So you do get a high speculative component valuation for future value. And then you'll see these are the bubbles. Like in 2011, tail end, it broke that band, the dotted band, and that showed that it was a bubble and it was detoxing. It's laggy. You can see that when it peaked, it was still in band, but as it was dropping, you can see as it was dropping, the valuation, network valuation is very high, but the amount of blockchain activity just died. and that meant that the ratio goes high. There's not the denominator is very small, not much value going through, and so you get this. It goes out of band, and so you'll see that, and then it stays within band. The interesting thing to note in 2013, in the first pump, they said the first bubble, it was not a bubble according to NVT, because the amount of activity in that blockchain was very healthy, and it was just business as usual, even though the market freaked. And if you were to look at the price chart, it plummeted something like above 85, 90% or so. It was a big drop, but it said, NVT said nothing to freak out about. And look, it recovered very quickly at that flash crash, and then it carried on back up. But then when we really got our bear market, after the tail end of 2013, all of 2014 was a bear, and NVT shows that very clearly, that there is some sickness going on the blockchain throughput, that we're valuing this thing really high and no one's using that chain. Nobody is speculating, adopting that speculation on the value in accordance to what's happening on the exchange. And so it had to come all the way into 2015 before we detoxed out of that, right? And in 2018, first time in a long time did we see NVT rise. And that's saying this, guys, is truly a bear season. It is not a consolidation. Like, often we see this pump, consolidate, and to try and tell between, is this the start of a bear, or are we truly, or are we just consolidating upwards? That's the $1 million question in a bull market is, should I take the money off the table right now, because it's coming down? You can see all through 2017 we pumped and then it dipped. There was like you can see it in that chart, like 2017 there was like some
right here.
3 prior pumps. No, go into the yellow line. The yellow line there is the market cap of network value of Bitcoin, and you can see it. There's points where it pumps, it does a big correction. They look like this is a huge chart and it's on a log scale, but if you were to look at this zoomed in, there were big corrections. You can actually drag the right-hand column.
I could.
And
I see.
You can actually, in the right-hand axis, you can drag that. Like if you go to the top or the bottom, like go to the bottom and drag it downwards of the axis.
Wait. I messed that up, but
you just hit the home at the very top there, yeah. Sorry, the one of the icons on the top right, which is the little home icon.
Oh, got it.
Hit there, that'll reset. But yeah, if you were to zoom in, you can just drag the y-axis.
Do you want me to zoom in on the market cap or on the NVT ratio?
On the market cap. If you see hover 1 million, the 1 million on the right-hand axis. Go down. Yeah, 1M near the bottom.
1M, this one down here.
Yeah. Now hover over the 5.
That 5.
Yeah, you should be able to drag it downwards. Does it drag downwards? Yeah. So you got.
You want me to expand?
Right. See, so you can see now we're magnifying. This is what's happening with the market, right? Well, yeah. Yeah, my bad. I should have made that easier for you guys. But no,
it's amazing. I had no idea these charts were like you can zoom in on this. But I just want to point out that just to rephrase what you've been saying, what you're saying is the best thing for the price of Bitcoin is people accumulating Bitcoin with minimal transactional activity on Bitcoin, which kind of goes in line with Saifedean's view on the future of Bitcoin being more of a store of value. And it basically goes directly in the face of everything that Bcash is trying to convince people is needed from a cryptocurrency to be valuable in the world.
Yeah, I'm of the view, this is another whole big topic, but I'm of the view that the role of blockchains is to store value. I don't even think blockchains are ever going to be a means to scale out, a means of exchange, right? These linear blockchains, we're at Bitcoin's at 5 to theoretical max is a 15 transactions per second. Let's say we do a lot of magic, we get to 150 transactions per second. Yeah, that is not gonna work with global commerce, right? We're gonna need 1 billion, maybe more transactions per second. VisaNet does 42,000.
Right. Well, that's what I mean. That's the whole promise of Lightning, which I need to do a deeper dive with some really good, smart guests. I mean, that's what Lightning is trying to do. They're trying to make Bitcoin more of a day-to-day value transfer. But the other point is, even if Lightning fails, it doesn't mean Bitcoin is going to fail. It could be even better for Bitcoin as far as its price is concerned as a store of value.
Yeah, well, like if you were to look at Lightning, and Lightning, be aware, is not a Bitcoin add-on, right? It's a every coin add-on. Like Monero's jumping on it, Decred's doing it, Litecoin's implemented it.
Well, because it's the only way to scale. Nothing else is scalable.
Well, this is true, right? It's true. But like you would think about this as like, if you got this Lightning network, if Lightning wins, which seems to be leading at the moment, and all the chains are plugging into it, what is the role of the chains? The chains can only do a few hundred transactions per second, unless you're Craig Wright and you think you can scale out Amazon cloud level computing. Yeah, I don't think so. But if you were to look at the limitations on these blockchains, then they hold value, right? They hold value, and it makes sense that a transactional layer to transact that value sits above it, right? So I've been thinking about the future of money exists in a whole bunch of chains that store value, you know, and then on top of that you have this layer of a network which does pay, and like a possibility of the future money stack would be something like a multi-coin wallet that holds all these chains, and a transactional layer, maybe it's like Lightning, and then like I want to spend this amount to buy my coffee, and I pay in my entire portfolio, whatever my portfolio is. It could be whatever, of a basket of altcoins, a basket of security tokens that holds my store of claim on all these, you know, publicly listed companies, real estate, whatever. It could be like the whole idea of money being a token of exchange is outdated. In this digital age, like, because everything can be microtransacted and instantly liquid, there's no reason why we can't build a stack of money where we have a layer of store of value. Above that, we have a layer of means of exchange, a medium of exchange. And actually, I think that if you were to think about that property of durability of money in the idea of a digital world, durability is probably, you know, like, will this note tear? Well, in the digital realm, it'll be like, how anti-fragile is it? Will it die because someone wrote a bug, right? So like, you want to diversify that risk by having a complete portfolio of multiple chains.
Well, wait a minute. So you do. So let's stick to that. We'll get back to charts in a second. So you do believe in a world of multiple blockchains, like like, what's your view on multiple blockchains and altcoins?
I think, honestly, most of the altcoins are just crap. Like, I'll go down the top 100 and I go crap. Oh yeah, that's something that might be interesting. But mostly, I think we're in the age of .com, hits.com, you know, like Food Van. There was a very few successful ventures that came out of .com, but a few of them, like one of them is Amazon.com, and I think
right. Well,
there will be a few.
Okay, so I agree with you, right? Here's where the .com analogy gets interesting, right? And there's two things there, right? So I think that Even if so, my view is that blockchains or blockchain is like the internet or intranets. There only needs to be one, just like we only have one internet. Would the world be better if we had multiple public internets around the world at the moment? The answer is maybe. We don't know. I'm going to assume no. I'm going to assume the world is better with one internet. I can barely maintain my social media and website on one internet. I don't know how I would do it on multiple internets. So one way to think about it is there will only, this is how I think about it. I believe there will be one public blockchain the way we have one internet. Now, the companies on top of the internet, some of them were successful, most of them were not. That's your Amazons, your eBays, your Yahoos, debatable. Well, Yahoo was probably the most successful at the time. But anyway, but like Netflix, I mean, Netflix is just Blockbuster that used the latest technology. Amazon is just, mail order catalogs that utilize the latest technology, right? Like there's nothing revolutionary there. It was the way they ran the company by utilizing the latest technology. That's what I foresee as far as companies are concerned. If you are utilizing the Bitcoin blockchain or Bitcoin correctly, you may be able to compete with the incumbents. That's how I like to think about it. Now, other people like to think about it as each blockchain is a potential startup on the internet age, and we know that 98% of them failed, 2% of them succeeded, therefore 2% of the blockchains might succeed. So these are your altcoins might succeed. Now, my argument is, even if I am wrong and more than one blockchain is going to succeed, I do not have the ability to profit from this because I don't know which 3 or 4 out of the 2,000 that we have is going to succeed. And I have no intention of investing in all of them. So even if I am wrong and more than one blockchain is going to succeed, the proper move is to wait for whichever one it is and then make a little bit of money on the back end.
I agree on that last side, where I think that it's risky unless you know what you're doing, like really know what you're doing, to just see what is gaining traction. Like it's a lower risk play. I don't necessarily think of, these are protocols, Bitcoin's protocol, Ethereum's protocol. I don't think of, like, let's look at the internet. What is the internet? The internet is layers and layers of stuff. At its fundamental, it's copper and fiber and all these different protocols. But that was all sewn together by this thing called TCP/IP, right? And that is just a really simple protocol that allows us to message. And when you think about messaging, it's very simple, right? I say something, you say something, we're going to make sure that when we talk to each other, there's a handshake, and it's got to figure out how to route between me and you. Very basic. And underneath
technically, so is Bitcoin, right? It's pretty damn basic. You have a dumb math equation that everyone is trying to solve, and then you just move this 1 megabyte block around.
Yeah, it's very basic if you want to send money from one person to the other, like I send you. But if you were to build something a little bit more complex, you got to do a lot of work yourself. And I think of Bitcoin as one of the protocols, I think a very good one, and like very solid. But if you look at the internet, what have we got? Above TCP/IP, and I don't think of Bitcoin as TCP/IP. I think of Bitcoin as, maybe it's HTTP, maybe it's FTP, maybe it's SMTP. Is it UDP? There's a bunch of shit that sits on top of it, and each one has a specialist use case. Like UDP is probably what we're using right now to talk. It handles lossiness, and that has its value. SMTP, good for mail. HTTP is kind of the thing that we use a lot these days. But every one of these blockchains have very specific use cases. Like people find using Ethereum, I don't necessarily agree that it's great, but it's very easy to do certain things that is very hard to do in Bitcoin. And so you get this sort of situation where different chains are specializing in different things. And you get also the case where, unlike like the internet, everyone's booting on it. Here you're seeing people migrating. You know, you can see people that are running, you know, like say Tether using the Omni layer built on Bitcoin, migrate now to ERC20. And I remember Vinny was saying, well, what's doing, was Civic built on ERC20, and then in the early days he said we're going to move it back to RSK on Bitcoin. And you see this portability where people are shifting their companies, their startups, right, on one chain, and they're moving it to another, like, because it's portable. Like, I don't like that protocol. I'm doing Skype, I'm talking to you, I'm using UDP.
Right.
I'm gonna move. Right.
Well, that's the thing, right? I completely agree. They could move from one to the other, but that's not Bitcoin's. Bitcoin is not competing with that, right? I mean, Bitcoin is competing to be money, and this is where you're right, because you could simply move your company from Ethereum to RSK to EOS to Ethereum Classic, then back to Ethereum. Because you can move between them, I don't see how any of those other companies, and I call them companies, EOS, Ethereum, Ethereum Classic, RSK, they're just companies. They're companies that have full control of direction of where it goes. So therefore, their tokens cannot actually, compete with Bitcoin for the properties of money. And eventually, the one that's going to win between Ethereum, EOS, and all the others is actually the most centralized version that provides legitimate customer support to all these companies trying to build on top of them. That if they want decentralization, I'm not sure why they would, but if Civic wants their token to be decentralized, their best bet is to build it on top of a company whose business model it is to allow them to have a decentralized token on top of it. Otherwise, they're just going to keep moving.
I think they're gonna.
And therefore, none of these protocols need their own native token to act as money. They just need the best customer support, and they can charge companies like Civic for the service and profit from it. That they're just business models.
Yeah, it's like, and the view I have, it's all part of it. And that, like, imagine if, you get into the realm which is really moving now with a lot of people looking to tokenize stocks or security tokens, right? Or like this represents ownership in that building or that company or whatever. And so in that view, centralization, decentralization, that kind of falls out of it. It doesn't matter too much. Like Bitcoin, yes, it very much matters. It's decentralized. But in this other thing, which is this token has a legal claim of that asset, and call it Hilton Paris token, which is a claim on that, a fraction of that company or a fraction of this warehouse.
Right. Right. Okay. But here's the thing, right? It can't be a legal claim on it, right? Because these tokens aren't yet legal. So not yet. It's a fictional, right? It's a fictional claim, right? Like the whole concept of legality is government allows you to have that right. So this idea that I'm going to decentralize this and now I own it is ridiculous because the government
own it or not. It's not. We're not decentralized. We're not decentralized it. We're tokenizing it, and tokenizing. I don't know. I mean, you must have owned stocks, right? And like owning, or you owned, like if you own anything, it's just a mountain of paperwork, and the liquidity is pretty not that great. In a lot of cases.
Oh no,
and the ability to slice smaller.
I agree. I agree. If people have no idea what it's like to actually own a stock, like when you buy a stock in your brokerage and you can hold on to it for a week, a month, a year, and then you sell it, everyone says, oh, you don't actually own it. The DTCC owns it. Some other entity owns it. That's perfectly fine, because the amount of paperwork that you would have to deal with if you actually own it. I mean, I've owned some stock, you literally have to put paper certificates in your safe. Like, this is not convenient. Nobody wants this.
Which was actually what we used to do a lot leading up to the financial crisis, because we didn't trust the system would stay up. So we wanted that claim in our safe and hold it ourselves, right? So you do all that paperwork when the shit hits the fan. But yeah, anyway.
And the thing is, and if the shit really hits the fan, those companies aren't even going to exist. And you have a bunch of worthless paper. You want this to be as liquid as possible so you can sell in a panic.
Yes, it's like there are these things that tokenization does add some amount of ease of use to it. Not talking about decentralization. I'm not talking about the world of native crypto, things like Bitcoin. But I do think we have this other animal here, which now considered a multi-token wallet, and then there's an ability in which we can transact, at portfolio level as money. So it's just another, it's just a thought. Anyway,
well, right. we are getting off topic. I went back to screen share. I want to talk a little bit more about your analysis and some of the other Bitcoin charts that you've created and that people like to follow. So we took a look at Nvt Ratio. What's another one you want to look at?
Okay, I think we're going to aim to finish. Let's finish this. So Nvt tells you if it's bull or bear. Great. Now, if you go back to the signal one's very fast reacting.
Nvt signal. Let's take a look at that. Okay, then let's check that one out.
And that one, even whether you're a bull or bear, it'll tell you on fundamental indications of what's happening through the blockchain, whether you should sell or buy. Now,
I mean, again, I'm not the expert at NVT, but right now it's telling me to sell because I don't see a difference between the current environment and July 2014.
Exactly. So we're at this one thing is you can look at the height, and we're at the height to sell, and you see all the other peaks where times to sell. That previous peak was the all-time high, and the all-time high of 2013 that told you to sell, and just before that really big dead cat in a slide in 2014 from 600s to 200, it told you to sell, and it told you to sell in the 2013 first pump. Right, so we're there now, and this is why I just put out a tweet, because a lot of people are saying bullish sentiment, but fundamentally on the blockchain, it's a dead cat, and it's going down.
So is this the tweet we're talking about?
Yeah,
with the 200-day moving average.
Yeah. And so I might be wrong about the price point. I said, I think when it was at 7,800, I said it could go down here, but if it breaks through, then I'm thinking 8,500 will be the top, and it'll be flat after 8,500, and it'll carve a dead cat, and then it'll come back down. This leads on to the other thing. I'm really into this whole 3 dead cats and a moon thing, which Bitcoin seems to exhibit this fractal where it peaks, it does 3 dead cats, 3 bounces before it's considered normalized.
But this is so do you think this is the third or this is the second?
This is the third.
This is the third.
Third, yeah. You can see the 2, you see the double top.
So this would be 1.
Dead cat 1,
2,
dead cat 2,
and that's
dead
3.
cat 3, yeah. And then, so I'm kind of thinking we're going to go sideways downwards, and we need to see whether the first green band is going to break. If it doesn't, that'll be the bottom. I kind of think there's a fair chance we'll get to the second band below. I think that's what you've called from early days, that would be the bottom. I kind of concur that would be. I think there's very little chance that will be broken. I think that is the absolute bottom, if not the one above it. What I'm seeing is that there's a lot more buying in this bear cycle than 2014. Systemically, it's much more healthy. There's a lot more activity. OBV, unbalanced volume, is the one I use, and that's showing you it's very healthy. A lot of accumulation happening in this bear cycle. So pick one or the other.
And I have to ask, so I've been looking at the 128-day moving average on the daily Bitcoin chart for a good 3 to 4 months now, probably most of this year. And I've been told that came from your handiwork. Is that true? Or
yeah, well, I did do it. You know, me not coming from a trader background, I'm like going, those moving averages, I'm going to tune that. And I kept tuning it till it hit all the bottoms for Bitcoin. And it was like, that works. And so I tweeted, not tweeted out, I have a Telegram group and I put it out to some friends. And I guess it was news to me until I saw your show and you said that I put it out. And I was like, yeah, that is true. But I didn't know how it got out because I never tweeted it. But it happened afterwards, right? So I don't know.
Man, nah, these things get out, man. And I always said, like, if you have a really good strategy, the best thing you can do is keep your mouth shut. I mean, this is why, like, no one will ever hear me talk about options. Because that's my specialty. I mean, of everything that I believe I am an expert in, I am an expert at options trading. Like, I will go head to head with anyone in options trading. And I don't talk about that publicly because I don't want to accidentally give away my secrets.
Right. Yeah. I give away my secrets. I did think about holding back the NVT signal because it was just really good. But I just figured, hell, I don't know if it'll work forever, and I'd rather put it out there. And you know, I'm not a professional in this. I don't make my money through this. I'm a casual trader. I just enjoy doing this analysis, and yeah, I make my money elsewhere. You know.
Right. No, and I agree with you, which is why I share all of my knowledge on markets and trading, except my options.
Yes. Yeah.
It's just a little too proprietary, a little too niche, and some of the things I do are so under the radar in the option space that, as far as I know, nobody knows what I do in the option space. I only have time to make like one trade a quarter, but it's something that I like really take seriously, even if I can put a little bit of money on it just to make sure that it's still working. You know, maybe I'll write a book one day. We'll see. Name a new strategy. But I'm keeping those to myself. But that's important for people. And people don't realize that I don't really care about the other stuff, which is why I also give away everything just like you.
Yeah. Yeah, I like it.
All right, let's go. Anything else? Any other charts here that you're really proud of? We want to dive into?
Jump into the Bitcoin money supply down the bottom. There's a lot of these ones that are, these are the charts I wanted to see, so I made them, right? So scroll down a little. So here we go. And this chart, I need to do, I've done a bit of data forensics to get the price going back to 2009. So just continue it going down to 10,000 to 1,000 on the axis because it follows this trajectory.
So, what am I looking at here?
Sorry, let me introduce this. This is vertical axis is the network valuation of these things, right? The jagged line, as we probably recognize from the shape, is the market cap of Bitcoin for its 9 years price history. Then the two lines above that, the flattish lines, is US dollar M1 and M2 money supply. Right.
Oh, I see. Okay.
So this is the reserve currency of the world compared to Bitcoin's market cap, right? And you can see this is a very long-term trend. And I was going to put out a chart. I'm still in building it. It takes a lot of time to build these infographics, right? But if you do the full zoom out, to the original.
Okay,
so,
got it.
So go to, right? You can see, look, there's a pattern here, right? I call it the Falcon 9 rocket launch. It goes steep early, and then it sort of flattens out and goes more horizontal. Now, if you did draw that baseline curve, I call that the adoption curve of Bitcoin. Bitcoin, I did a bit of research which shows Bitcoin's user base, as in more people holding it, it's pretty much double every 12 months. It doubles, and it's been doing that since year dot. And so each one of these new people coming in buys it, holds it, and this is what it translates into. This market cap growth, very predictable. What you see with these ripples above it, I think of that as bubbles, you know, market speculation, short-term market speculation, not the long-term holding type stuff. And we see these ripples. So I think that we just continue this. And there's two things to come out of that, is that we're above band right now. Around the $4,500 to $5,000 mark puts us back in band of the long-term adoption path. So we're still in the speculative bubble that needs to detox, and around $4,500 to $5,000 by the end of this year puts us about right. Second thing to note is we're about 2/3 of the way in to hitting M1 money supply. So yeah, if this continues the way we're going, it's a little bit of error or judgment to be made, how this trajectory is going to go. But if we're like 9 years into it, maybe 4.5, 5 years, we should see a crossing to M1 money supply of Bitcoin. And you'll know that, folks, that the news will change. Like, it's changed from Bitcoin as drug money to, you know, Bitcoin is a bubble in 2017. And when we start to approach M1 money supply, we're going to see news articles that will say Bitcoin is destroying economies. It's the bane why we're in a recession. That's what I think is going to happen. And yeah, this is the other one.
Yeah, I was curious what you do for Bitcoin's risk-adjusted ROI. What was your risk-adjusted basis, or it just looks like the price of Bitcoin versus other assets?
Like, I just put the gray line that's the Bitcoin in the background, so you can see roughly what was happening with Bitcoin. But all the colored lines show you the risk-adjusted return. Right. So.
Okay. So this thick line is actually Bitcoin again.
Yeah, the thick line is Bitcoin, and then it's comparing to the S&P 500, which is.
So what was what'd you use for your risk-adjusted ROI factor?
It's called something called the Sharpe Ratio, and what that is.
I'm familiar with the Sharpe Ratio. I wouldn't be able to answer if someone was interviewing me for a job and asked me, like what it was, I totally bombed that. But I remember actually looking at it back in the day.
It's what it is. I did this early on. Thinking I want to do this. And what I did was I got the ROI, what the price is to what was yesterday kind of thing, and divided by the volatility of the price. And I just put up this chart and was all wrong, completely wrong. And Chris Beniski said, oh, usually it doesn't go above 4 or 5. That seems off. And I said, really? So we got in the private message chat, and I said, can you show me your calculation? He sent me a spreadsheet, and I was like, oh, well, this is a legitimate thing that people do. And
so you put this thing, you didn't know it was the Sharpe Ratio, like you didn't know.
No, I didn't. I was just doing my own hack of it, and then I realized, and I fixed the calculation. The Sharpe Ratio is the ROI, how much returns you're getting, but you got to divide that by how much the ROI is fluctuating. If it's apeshit crazy, one day you're getting 100%, the next day you're getting -50, that's apeshit crazy. So you measure the volatility on your ROI, and then you divide your ROI by the changeability, the volatility of your ROI, and that allows you to compare apples for apples, like Bitcoin against the S&P 500, or Bitcoin today, which in 2018, or the peak, is getting the same kind of risk-adjusted return as the OGs of Bitcoin back in pre-2014, right? They got really high returns, but they were taking crazy risks. And so it's just as good as now as before, right? The only difference now is it's less risky, so you can add more allocation, or if you're a margin person, you can leverage more. But actually, it's more like have less, like more allocation, not like leverage more. But yeah, it's okay to put more money into Bitcoin than it was in 2014, and you'll get the same returns.
Right, but we actually went into the negative zone back at the end of 2015.
Oh yeah, Sharpe goes negative, of course, because your ROI can be negative, and this
that's
is
at the end. So the risk-adjusted ROI of Bitcoin was like bottomed out in December of 2015, when the low in the price of Bitcoin came in January of 2015.
Yeah. Oh, sorry. So just look at the bottom. It says it is a 2-year running time frame. If I was to do this over it's not a predictive indicator. It's not a price indicator. It is a long-term macroscopic view, longitudinal view of what the history is. And you can see on average, it's above all these other asset classes. And it's a 2-year running average. So at the bottom, and sort of in that where you're pointing out, you just had a 2-year aggregation of bear market. So it's at the bottom, right?
Right.
And that's probably a good time to buy in, right? But it's certainly not an indicator for trading. It's like, just look at that line. Is that line above all the rest? It's saying the history of Bitcoin is we have much better returns for the amount of risk we're taking against the S&P 500, gold, oil, US real estate, bonds,
Right.
all of that stuff. So I like to show that chart to, like people who poo-poo Bitcoin as an investment with official kind of thinking, particularly people who have had financial background. I generally use this, and I use the market cap growth that we saw prior, and show them the long-term history in numeric form without, hearsay. And that usually is quite compelling.
Gotcha. All right. So those were your charts. This was a great article about NVT. You wrote that back in February. You've only written 2 articles since then, and both of them in June. You want to take a look at one or both of them?
Nah. I mean, this one is a rehash of an old tweet in 2017. I just haven't had much energy to blog lately, and it takes a lot of work to put all this stuff out. I think it, but this is why I tweet a lot, guys. If you guys want to see the stuff I'm thinking about, it's best to follow me on Twitter. But yeah, this is like, how we rebalance portfolios. There's a lot of this thing is like, when we're really heavy on one, we should rebalance out. It's risk mitigation. And the thing with this, my view, it might not be right, but if you were to think about crypto, this whole place is like an emerging technology. And so when you balance portfolios, it's like, let's move a little bit from real estate into equities or into bonds or whatever, right? It's about balancing the risks, as the risk profile of these different asset classes are different, and they move independently, right? So like when we're in crypto, everything moves together. It's like, you look at coin market cap, those little spark lines, Bitcoin goes up, everything goes up, right? So there's no point in reducing risk by, if I'm really heavy on one and light on the other because that one grew big, you're kind of in the space of venture capitalists, right? You're this thing's taking off. It's Facebook. I have my share space stocks as well, and my shares is you know, a really heavy Facebook. I should rebalance all my Facebook shares into my space. Does that make sense? You know, so that's what we tend to do in crypto, and I'm just giving you the venture capitalist viewpoint on emerging technology. You're not really reducing risk. You're actually doing the thing of double downing on the losing asset by rebalancing.
Gotcha. So here's probably the biggest question we have. What is in Willy Woo's portfolio, and sub-question, crypto portfolio?
Yeah, I make it a point not to say. Sorry, I just don't like. Yeah, I don't want to promote any one coin over the other. I don't want to say I'm doing this and everyone goes all in on that or not. You know, it's just I could be completely wrong. I don't want to pump a coin. I don't want to.
Okay, so let's rephrase the question, right? Without naming any coins, is your let's talk about asset classes using crypto as an asset class, right? So what is in your portfolio besides crypto? Is there gold? Is there stocks? Is there other fiat currencies? Let's start with the higher level. Is your investment portfolio have things other than crypto?
Yes, I have. Crypto is by and far the largest because it's gone apeshit crazy.
Right. Like you don't have to name the stocks, but like what is approximately your percentage?
I don't do stocks. Yeah, I just don't.
So I'm assuming you still have some gold.
No, I don't have gold. Oh, do I? Yeah, a little bit. I do have a little bit of gold. Yeah, like I have real estate.
Physical real estate?
You guys shouldn't invest like I do because mine's very personal. I live a really, really different life from most people. And a lot of things, they're just not great vehicles for me. I have real estate, not because I love it, but they're very personal. They're like, you know, it used to be my house, you know, or that used to be my holiday home. It's not around investment, you know, and crypto itself is a thing that I enjoy. And like I say, I'm not a trader, and I invest. These are the things I invest in. I have real estate because that's the thing that I've had. I have crypto because I'm deep down the rabbit hole and I understand it. And I only invest in stuff I really understand. And the other thing that I feel like I understand well enough is the tech scene. So I have equity in tech startups as an angel investor. And these are, if you look at that, you've got crazy, volatile, risky crypto. And then you've got even just as crazy, volatile, risky startups at the angel seed level. So, but those two things I live inside of. I think about it every day, you know. And so, so don't do what I do.
All right. Well,
don't do
that. I promise you guys, please take those words to the next part I'm going to ask Willy. And let's zoom in on your crypto portfolio without naming any specific coins. What percentage of your crypto portfolio is Bitcoin versus other, approximately?
Oh, okay. What I aim to or what I have? Right now, I have just about 0 Bitcoin because I'm parked in tethers because I'm very bearish on the whole crypto market right now. I think
so you actually have. Well, I'm sure you have like a couple of Bitcoin like for use for like.
Yeah, I do. I have Bitcoin. I do have Bitcoin, but it's nothing compared to the main.
Got it. So you are expecting lower prices to buy back in.
Yes, I am.
Okay, so all right. Yeah. So it looks like you cashed out of Bitcoin. Are you holding any altcoins without naming them? So I break altcoins down into 3 types. Okay, there's 3 types of other than Bitcoin to to me. And there are some subsections. So one of those types are, fairly launched proof of work coins like Litecoin, Monero, probably a couple of others. Then I consider proof of work coins that are, were created under questionable circumstances. These are your Zcash that keeps 20% for their profit organization. These are the Dash that had that Instamine. So I consider like proof of work coins that are questionable for-profit companies. And then the rest is my ICOs and proof of stake, basically something I consider totally scammy. So between those three types, what's approximately your allocation to them?
Yeah, it's with Bitcoin, and like my top three holders comprises 80% of the portfolio, and they are the non-scam types, as you were alluding to. It's just there was
the honestly created proof of work coins with no skimming off the mining reward and no proof of stake.
Yeah, exactly. I don't like pre-mines. I don't like taxes. I don't like I don't like Dash. I used to hold Dash. I used to have a masternode, and then the more I researched, I was like, oh.
Oh yeah. No, I agree. Like, I would say of all the altcoins I've held at one point in my life, the altcoin that I've had the most of was Darkcoin, which became Dash.
Yeah, it's like I think I ran a survey on Twitter a while ago. It was like, which Ponzi has the longest running pump power? Is it BitConnect? Is it Dash? And I forget another one that we had. And a lot of people said, is Dash a scam? And yeah, sure, I can throw you a whole bunch of data that shows you there's something suspect about Dash. But yeah, I felt good, and I missed the big pump. But I'm glad, because
so did I. I sold all my Dash at $10.
Yeah, I was around that. I was listening to, I think, you and Fluffy Pony talking about some of the issues with it. And but I was looking at the data behind the holdings and the Instamine and all that stuff, and like, gosh, that Dash network is held by the Instamine. There's a lot of suspect things. It's very centralized, those holders. And then you look at, I don't want to get this, like, you look at who half of the returns, half proof of work, half goes to the stakers, 10% to the tax, which is controlled by the stakers. So actually 55% of the new funds being generated, inflation, is controlled by the Mastodon network, and rich get richer. And then, like, the treasurer said, we don't, I hated that, man. We do not pump our coin. We don't hype it. We just get our heads down and we just put out work, which is actually what Monero do. And then he said at the tail end of that article, but I let you know that we'll be one of the top 5 coins by the end of this year.
Well, I'm sorry, which one?
This is Dash. The treasurer said, Baby Giraffe said, by the end of this year, we'll be one of the top 5 coins, having just said in the same article, we don't hype our coin. And then after that, it pumped from $20 to what, hundreds to then 1,000, right? Yeah. And I was like, oh, I can see how that's happening. You got 55% of these returns coming in from the Masternode network, which you control, and then you sell that over the counter to get Bitcoins, and then you buy your own Dash all the way to the moon, which did I tweet it? I think I tweeted that. I don't know. I think, was it Whale Club or someone exposed that was actually what happened later with the exchanges in on it. That was just a dirty thing. All right,
anyway. Gotcha. So what's your, do you hold any like ICOs or ICO networks like Ethereum, EOS, like Waves?
I bought the Ethereum ICO, and I didn't hold it later like I could have done really well holding it, but I didn't see how it could continue to be secure. And I still have its doubts, but certainly it wasn't the best financial decision. A lot of network effects on that one. I still
So
don't.
what's your general thought of Ethereum, and what about all of these ICOs that are coming out? Obviously,
yeah, okay.
you're not going to hold any ICOs for the long term, but do you play them short term?
Okay, yeah, I have held a 10% allocation for buying ICOs.
Did you say 50 or 15?
10%.
10. Okay.
10% allocation within that, of which some of them I hold onto, like, yeah, without naming, I was going to name them. Some of them I hold on to because I think some of them have real businesses, real large businesses, and they're tokenizing as a way to solve particular problems. And I think that, you know, this is not a, like, this is completely different from the decentralized protocol launch. And I think some of those things I hold, a lot of them I'll give it a shot for a short-term hold. But then every now and then I am waiting for the next generation. I think that Bitcoin's here to stay. I think that we're all trying to do the 2.0, you know, like what Ethereum's trying to do. And I think that this problem will be solved. So I keep my eye out for some project that will solve scalability fundamentally. And I'm seeing some promising stuff now. And so I'm certainly not going to sit on Bitcoin as 100% maximalist. I think that we're in the dial-up age. And I think that broadband's coming around the corner. And we're not going to change the world on dial-up speed. And I think Bitcoin's fine, store of value, have a lightning network. There's some amount of work to be done to scale up the base chain to handle the onboarding to the lightning network. I mean, current Bitcoin's capacity would take 40 years for the world to jump and open an account onto Lightning. So that's not bad. Like if you did a 10x, it would take 4 years. If you increase the block size by 10 times, and we've already increased it 4 times with SegWit. So it's doable. But then when you look at things like Ethereum, you do need a chain that is a programmable business logic kind of chain where, if you look at Wall Street, I think someone did some work that all of our finances, all of our financial markets comes down to something like 30 or so fundamental financial contracts. And there's a group, I forget the name, that's working on how to digitize that into an algorithm. And so I do believe that all of the financial economy can be digitized, internet native onto these kind of, you can call them blockchains, but I think that this kind of ledger, for what want to be a decentralized ledger. And I think that, we need to be able to do more than just dumb value transfer. No, I do think smart contracts do have its uses, and I'm looking for a chain or a ledger, a network that allows scalability at the billions per second, so we can digitize this future. I do the 10,000 year view. That was one of the articles that probably brought a lot of attention, which is, let's look at how crypto fits in over 10,000 years, from agrarian age, from lumps of gold to paper being traded around lumps of gold in the industrial age, and then going to full fiat on the tail end of the industrial age. And now we're going into a digital age. And we're in this thing called a post-industrial revolution, where we're going from these old forms of finance into a fully digitized form. Like everything's being digitized. And I think the finance will be swallowed up by the software. And so, I will buy ICOs on the lookout for, they might not look like ICOs, but whatever, like say Grin's doing a launch and there's no ICO there, but I'm looking at the new technologies, and I want to allocate some amount so that I don't miss the bus on broadband. We're in dial-up. we're not going to change the world on dial-up.
Right, but it is a small amount. You did say about 10% of your portfolio goes into these ICOs.
Yeah, yeah. And super high risk. I don't care if I lose it all, but the main thing is I don't want to miss the thing that will take this vast amount of relevancy into the mainstream.
Right. Well, I am on the other side of that bet. I only allocate to Bitcoin, and I still think that we may not have any of these tokens useful. And it is, at the end of the day, going to be dumb value transfer routing, because that's actually the most important aspect of this. It's trying to change society by decentralizing money.
Well, I can't fault that, you know. I can't fault that. It's a very solid bet. It's got the network effects. It's very solid, the protocol, and you know what a killer app is, right? Killer app is the thing you got to get. You want that thing so much that you buy this thing to get that, right? And money is like that killer app. You got to get it. So by and large, everything else sits inside that market cap, inside of money. So yeah, it's a good bet.
All right. Well, unless you feel that there's something I missed in our conversation, let's just close it out by having a little bit of a look at price. And here is the weekly chart, though I kind of feel like jumping to the daily. I got two questions for you. One of them came from somebody I know. And let me ask that one first. What is your favorite metric to identify a top? Is it like in Bitcoin? Is it
in Bitcoin in a top? Yeah, it's actually NVT. It's only NVT signal by Dmitry. When I applied the trader tools on top of that, I was like, holy moly, this thing picks the top, and it picks it every time. And so that's the thing that I'm most confident of. And then I'll always back that up with at least two other indicators that push. Like if it's in a disagreement, then like I'm not so confident. But yeah, NVT is where I pick the top.
Do you think NVT is something that I don't know if you want to take the time to do it? Is that something that could be, put into TradingView? Is all the data public? Is that something that could be done?
It would. Someone would have to write an app because it's not price volume. It's price volume and blockchain activity. So we need to bring in data outside.
Yeah, to be honest, I would love blockchain activity to be in TradingView. I would love to plot price on the same graph as hash rate, on the same graph as transactions from blockchain.info. It would be great to get that data into TradingView.
Yeah, it's funny. Yeah, it's like you asked me what I do these days. I'm working on something, and we've been working on it for a while. So hopefully we'll come out with it.
Very nice.
Yeah.
And by the way, TradingView, they do have, their APIs, so you can use their charting software and apply it to your own database of data.
Someone should do it. Definitely, someone should do it. And the thing is, it relies on an estimate by blockchain.info, and they've got some secret source in there which is not public, but it's the best estimates of blockchain volume that we have. Like Coinmetric do some, like on-chain FX uses Coinmetrics. They used to just run a ratio with market volume, which wasn't very accurate, but now they're using a forensics algorithm for filtering, which is a lot better, but I found it's not quite as good for trading on as blockchain.info. So I'd love to know or have some amount of reliability that data will continue to, if we're going to use this, I'd love for that to be a publicly accessible algorithm so people can rely on it. But yeah, NVT signal is the one I use to pick tops. This is why I'm bearish right now. I don't think we're going to break 8,500. And if it does, I don't think it's got much legs above that.
Gotcha.
It's like screaming all-time high signal right now for overbought.
Let me just reload this page for 1 second. This is the daily chart. I got one other question for you. There we go. This is my daily chart. Let's do this. And let's zoom out. And here we go, inputs. I want to just make it cleaner. There we go. Do you remember when you realized that Bitcoin had topped? I can tell you when it was for me. I felt that, I mean, this bull trap still looked bullish to me. I thought that we still had a chance to bounce off the short-term moving average, go back to new all-time highs and go higher. But somewhere around here, somewhere around January 10th, January 11th, I recognized that it's over and it's time for the bear market that could be significant. Do you remember when you recognized that there will be a prolonged bear market?
Yeah, there was a time where I was really busy off the charts, but I remember looking at the standard NVT, and that was creeping above range. I was like, yeah, this is the bear.
Do you remember when that was? Like which week? January, December?
It's on the chart. Let me grab it. It was somewhere. It was early. It was early in that year, around that time. I was like, yeah, and I didn't have my portfolio. I was really busy doing other things, but I didn't have my portfolio set up. I was too heavy in alts at that point, and it's very hard to move out of those positions because they're not very liquid. And so I was waiting for, like, my strategy. My strategy was I would wait for the dead cat. Like, the dead cat would be like maybe 25% off the top, but this was back when Bitcoin was around 2,500 going to 5,000. We knew this was going to go into a big bubble at that point, but you don't know where the top is. So I says, screw it, let it top out, little dead cat, and then I'm going to sell on the dead cat. I kind of thought it would be higher than 12,000, but it showed that we had peaked at 12,000. So that was where I moved out at that point.
Right. So here's our daily chart. Our candle just flipped. I'm going to let you go because it's like 1 o'clock in the morning where you are. So you probably want to get some sleep. So I'm looking at the daily chart right here. We are under the 200-day moving average. This was a substantial move from a $5,700 low, about $5,780, $5,790. I really thought this can go all the way to 5,000 before a bounce of this caliber. Because it didn't go to the $5,000 area, it was difficult for me to predict this bounce. I was ready to predict a bounce like this off of 5,000, but we didn't make it to 5,000, so I ended up kind of missing this. But it was always a dead cat bounce to me as well. And I am expecting a turnaround pretty much any day now, even though the weekly chart looks pretty strong. And this is what I was waiting for. Right here, I am looking at the 30-week versus 50-week. I had found these moving averages to be very useful, and they are literally a millimeter away from crossing. So it didn't happen this week, so it's definitely going to happen next week. Oh, you're muted there, Willy.
All right, hey.
So yeah, I think this thing is ready to top out. I'm with you. I think it's ready to reverse any day. The 12-hour chart is starting to consolidate. I will say the longer we consolidate, the better the chances are for one more push to the upside. But we'll see what happens.
You know what I think? I think that what we're going to have key signs that tell us when to buy at the bottom. Once NVT gets back into its band, that is like we've detoxed. The other thing to look at is the volatility, historical volatility. Pull it up on
Wait,
TradingView.
so are we talking about NVT ratio or NVT signal? I mean, obviously
NVT ratio.
ratio.
Remember the standard NVT ratio, that one, the long, slow, laggy one, that tells you when we're in the bear market, and it tells you when we're out of it. And when that comes back, and you can see how high it is, and you can see the rate of decline from 2014, if you think of that rate of decline and how many months it took to go from where we are now at that high to getting back within bands, we're still maybe a third of a year or so to get back down.
Well, we're right on schedule. I mean, the peak in NVT ratio took place in July of 2014. And here we are again, July of 2018.
Yeah, I think last week, to pinpoint it, if it was exactly the same, it was last week we were in, so like May 28th, 2014, in terms of where we were in the price chart. And yeah, give it 3 months for it to get within band. And then once it's within band, wait for volatility to drop. Pull it up on your trading view, historical volatility, tweak those numbers. I think around, was it 60 days, 90 days? Like just tweak the average so that it
Well,
it
what are
doesn't
we doing for historical volatility? I can always pull up like Bollinger Bands. That's a measure of volatility. Or do you want like OBV?
Go into it. You search the indicator historical volatility.
Oh, there's actually an indicator, historical volatility.
Yeah.
I did not
type
know
in
that.
historical volatility.
There
you go. And then you chuck that in, and then you tweak the settings so that it's not apeshit crazy all over the place, and it's showing smooth bands. And then zoom out on the chart, zoom out on it, so that you can see the historical accumulation bands from the last 5 years where it had bottomed. And you'll see wherever we get this long, flat, low volatility band, that's when the accumulators are coming in to hold the price up. And the speculators aren't pushing it around anymore because there's a floor. The accumulators are coming in to buy up cheap. And historical volatility will lower itself. Volatility goes up whenever we're in a bubble, like S&P 500 right now. It's getting very volatile. When it's low, it's solid, it's flat, that's when you should accumulate. And so look at where we are, and we're still high. We're still a bit of time to burn over the year for it to come back into the classic accumulation zone. That's another one I'm looking for. So I'm looking for the key signs in the market. Historical volatility is one, NVT is another. And then I'm looking at volume profile to try and guess where the major bands of historical support are. So these are the bands, right? These are real prices and real values that people traded coins on. They're not magical trader patterns, like they're great and all over short term, but these long-term trends, you want to look at where are people actually agreeing the price is fair and they're doing a lot of volume at. And the last band we've got is in the 4,000s if the current band doesn't hold. So that green band was very prominent before this last move, and that was the last area of support before it bottomed. And now we've sort of rubbed over a lot of the that sort of jutting out of volume support. And now it's just looks like a big bunch of value. But yeah, those are the three. So yeah, 2019 is where I think we're ready to set up for next year on a bull pattern. We've got a lot of sideways movements on the tail end of this year.
Yeah, looks like we're on similar timelines. My most optimistic price is just a smidge under 5,000. So like 5,000, 4,900 area. That's my most optimistic price bottom. my most optimistic time bottom is late October, early November. Now that's my most optimistic version. My most pessimistic versions of both, my most pessimistic price version is 1300, and my most pessimistic time is the second half of 2019, or maybe the summer of 2019, let's say, like August of 2019. So that's my worst case scenario is 1300 in next August. My best case scenario is 5,000 in late October of this year.
Yeah, I kind of concur on the 5,000 and the 4,000, and I don't think we'll get as low as the 1,300 on the strength.
Well, right. I mean, there are other levels in between. It's just that I don't really want to focus on the in-between levels of time and price until after my most optimistic scenario has achieved on both time and price. And then I can reevaluate because now I can zoom in because now I have less price to work with and less time to work with, and I can analyze that side better.
Right. Yeah. Yeah. I actually am framing it around the time more than anything else. And I agree totally, wholeheartedly with your analysis. I think that October is the optimistic, and then into mid 2019 is where, that's the zone. I think early 2019, and then wherever the price will be for that detox, and then we just have to look at the levels, and it's 5.5, it's in the mid 4,000 to low 4,000, and if that falls through, then yeah. I don't think it'll fall through. I think there's too much strength in the market, and I think some of that $10 billion from the hedge funds coming in will be in the 2019, and that's probably going to hold it up. I don't think it's enough to go apeshit crazy. I think it's going to be a solid bottom, and then we'll take some time.
All right. Well, we should end it here. I'm going to throw one last question at you, only because it just came into my head. I should have asked it earlier in your NVT stuff. Do you think there is a difference in your work with NVT because you are using Bitcoin's market cap? But in the last bull and bear market, Bitcoin's market cap was 90% plus of all crypto. And now things like Ethereum and Ripple and others have taken a big chunk. Do you think that matters that your NVT work used to be 95% of the market, and now it could be as low as 35% at some levels? Do you think that affects it in any way? Or have you thought about maybe doing that same formula for the entire market cap, or maybe let's say top 20?
Well, that's an interesting thought to do it across everything in one big chart. I think that no, it doesn't. These are specific to individual networks, and I don't even know if it applies to all other coins. I haven't tried it yet properly, but Bitcoin is by far the most real coin in terms of its market cap. Everything else trades off Bitcoin. So Bitcoin controls the price of the coins. And then on top of that, you get like Ethereum, which is a big chunk of that so-called dominance. Hey,
look at what we missed in the last 10 minutes.
Show me the chart.
This is 10 minutes, by the way. The hour started. There's still 48 minutes left in this hour. So in 11 minutes, this happened. We went from an opening of 82.20 to a low of 8,065. So we just dropped 150 bucks in 11 minutes.
Did you cause that tone?
I always do, man. I always do. Man, they always blame me when a market goes down, and then they always, like make fun of me how wrong I am when it goes up.
I should buy it back in. It's just like close your shorts and go long here because it's probably overreacting. I think it's going to go sideways a little bit longer. But if you look at Ethereum, its market cap is based on lockup. A lot of ERC20 locking up Ethereum, and it's not something as organic as Bitcoin where it's just holders Just so, yeah, a lot of valuations in crypto are fake, really fake, based on, locking up. And
Well, right. And the whole concept of proof of stake is artificially forcing people to lock up the Bitcoin. Well,
staking,
not
yeah,
Bitcoin, sorry, they're tokens.
staking. Yeah, I get you. I didn't get, yeah, it's not necessarily proof of stake, but the ability to stake your coins and lock them up. Yes, I agree.
Right.
Yeah.
All right, man. I'll let you go. It's really late over there. So where can I'm sure most of my audience knows exactly where to find you. They're mostly familiar with your work. I do have links to your website and your Twitter on there, but go ahead and tell the people where to find you. We are doing an audio podcast as well. So go ahead and spell it out for everyone.
Sure, I'm on Twitter. It's probably the best place to catch me. I do much more content on there. Woonomic, Woo double O, and then Nomic. And then you can get my blog at woobull.com. .com? That is .com, eh? Yes. And yeah, that's pretty much it, really. Otherwise, come visit me in somewhere in the world, sometimes in Bali. Or come to Tone's retreat that might be happening.
Oh God, no, not yet.
Okay, no news about that yet.
No, we're working slowly. I am planning something really cool early next year in Vegas, and then maybe one day we will do something interesting on some kind of a analyst/trader, hardcore bootcamp retreat. But that is nowhere near in the thought process yet. Just a brainstorm for a crazy idea that everyone is too lazy to actually pull off. But other than that, I'm looking forward to meeting up with you one of these days if our paths are crossing.
For sure. Me too. Okay, guys. Thank you. Been a pleasure.
Awesome. Hey, thanks for watching, everyone. Once again, this has been another great episode of On the Record with your host, Tone Vase. Please check out the audio podcast on iTunes. Talk to you all on the next one.